Stop scrolling. The U.S. may have seized Venezuela's oil, and history shows this move could reshape global finance. Watch carefully or miss the crucial lesson completely. Venezuela has endured repeated financial crises tied to oil prices and mismanagement. Understanding this history is essential to grasp the global impact of recent events. In the early 2000s, Venezuela's oil dependence led to massive inflation, currency collapse, and widespread economic hardship. These patterns repeat when oil control shifts politically. The U.S. has a long history of intervening in foreign oil markets. Past actions influenced global currency stability and investor psychology for decades. Oil control has historically determined power in finance, trade, and geopolitics. The country controlling oil reserves often maintains currency dominance during crises. The 1970s oil shock illustrates how price fluctuations affect the global economy. Inflation spiked, markets reacted, and many nations adjusted financial policies dramatically. Venezuela's mismanagement and oil dependence created economic volatility. Citizens experienced devaluation, scarcity, and unrest. Historical parallels suggest careful observation today is wise. Later, I'll show a chart connecting historical oil shocks to cryptocurrency trends. Missing it means ignoring patterns that could clarify modern finance. The US dollar became the world reserve currency partially due to oil trade control. Historical interventions reinforced its global dominance repeatedly. Petrodollar agreements in the 1970s stabilized the dollar but created dependency on oil-producing nations. This historical structure still influences global finance today. Venezuela's oil reserves are among the largest in the world. Historically, controlling such resources provides leverage over global markets and currency valuations. Currency collapse often follows oil mismanagement. Historical examples include Venezuela, Zimbabwe, and Argentina. Observing these events provides lessons for understanding financial patterns. Bitcoin emerged as a response to financial crises, particularly the 2008 global recession. Its role mirrors historical alternatives people used during currency instability. During geopolitical crises, fear drives adoption of alternative stores of value. Bitcoin is a modern tool reflecting historical safe haven behavior. Stay tuned. I'll reveal how past oil and currency crises mirror Bitcoin's price patterns today. Missing this insight means missing history's lesson. U.S. interventions in Latin America historically influenced resource control, markets, and currencies. Venezuela's recent events fit this long-term historical pattern. Venezuela's inflation history shows rapid money devaluation. Past lessons demonstrate how resource mismanagement destabilizes financial systems globally. Oil price volatility impacts trade balances, currency strength, and societal stability. History reveals repeated patterns whenever oil control changes. Bitcoin's value often rises during currency uncertainty. Historically, people shift wealth to alternative assets when fiat money loses trust. Observing Venezuela's oil history shows predictable market reactions. Oil shocks correlate with global economic anxiety and investment shifts historically. Later, I'll show a timeline of oil crises and modern Bitcoin responses. Missing it is like ignoring decades of financial knowledge. During the 1980s, oil price fluctuations influenced inflation, interest rates, and investor confidence. Historical parallels help interpret current events. The U.S. seizure of Venezuelan oil mirrors past interventions in Iran and Iraq, reinforcing historical patterns of resource-driven financial influence. Historical finance demonstrates that controlling key resources shapes global markets. Venezuela's oil history fits this trend. Bitcoin acts as a modern counterbalance, historically reflecting fear and uncertainty when traditional currencies weaken. Observing patterns allows historians and financial analysts to predict behavior, not exact prices, but broad market trends accurately. Venezuela's repeated crises highlight how resource dependency creates vulnerability. History shows consequences ripple beyond national borders. Later, I'll link Venezuela's past crises to modern crypto trends, showing how history repeats itself with surprising precision. The US dollar's strength historically ties to oil trade. Controlling oil reserves reinforces financial power and currency trust. During past oil crises, global investors adjusted asset allocation to hedge against inflation. Modern cryptocurrency adoption follows similar patterns. Historical events show panic and hoarding increase during currency instability. Bitcoin adoption reflects these long-standing behavioral patterns. Venezuela's oil-dependent economy collapsed multiple times due to external shocks. The historical lesson: resource reliance without stability invites crises. Don't skip ahead. I'll link Venezuela's historical oil crises to modern cryptocurrency trends. Past U.S. interventions in Latin America shaped trade, currencies, and markets. Venezuela's situation is a continuation of this long-standing historical influence. Oil shocks historically trigger inflation, currency devaluation, and societal unrest. Observing Venezuela's history reveals predictable consequences. Bitcoin responds to uncertainty similarly to historical safe haven assets like gold and foreign currencies. These patterns repeat across time. Historical finance shows that resource control is rarely neutral. It always affects global economics and investor behavior significantly. Later, I'll highlight a pattern repeated in 5 historical oil crises that mirrors Bitcoin's reactions today. Don't miss it. Venezuela's economy suffered hyperinflation due to oil dependency. Historical patterns show small interventions can have cascading effects globally. The U.S. has historically used oil control as leverage in diplomacy and finance. Venezuela is the latest example of this approach. Currency stability often follows resource control. Historical evidence demonstrates predictable consequences of power shifts in oil-producing nations. Bitcoin emerged as a hedge for historically unstable currencies. Observing these crises reveals why crypto adoption accelerates during uncertainty. Stay tuned. At the end, I'll show how historical oil and currency patterns forecast modern crypto trends, highlighting repeatable financial lessons. Oil price fluctuations historically correlate with market anxiety. Venezuela's control shifts create observable patterns similar to past crises globally. Inflationary periods in Venezuela mirror past crises in other nations. History teaches that these economic shocks repeat predictably under certain conditions. Bitcoin often rises when fiat currency confidence drops. Historical patterns in past oil crises explain similar modern market behavior. Don't scroll. The chart linking Venezuela's historical oil crises to modern cryptocurrency trends comes next and is critical. The petrodollar system historically tied global trade to oil. Venezuela's oil seizure affects this system and demonstrates repeating historical influence. Past interventions in oil markets caused cascading effects on stocks, commodities, and currencies. Modern Bitcoin movements reflect similar patterns historically. Venezuela's crisis history reveals human behavior: panic, flight to alternatives, and resource-focused investment. Bitcoin follows this pattern today. Watch carefully. At the end, I'll summarize the historical pattern repeated in every major oil-related crisis. Oil control historically stabilizes or destabilizes currencies depending on management. Venezuela's situation shows these predictable effects. Bitcoin's adoption historically spikes during uncertainty. Past crises illustrate repeated investor behavior during currency instability. Venezuela's repeated financial collapse highlights the consequences of resource dependence. History predicts similar ripple effects globally. The final 5 paragraphs reveal a historical chart showing Bitcoin and oil movement correlation over decades. The U.S. has leveraged oil reserves historically for financial influence. Venezuela is a continuation of this historical trend. Historical analysis shows patterns: oil control, currency impact, market behavior, alternative asset adoption. Bitcoin today mirrors historical safe haven behaviors from past oil crises, reflecting human response to economic uncertainty. Venezuela's oil history teaches the dangers of over-reliance on single resources. History repeats, so understanding patterns is crucial. Stay tuned. I'll show a timeline linking past crises to potential Bitcoin trends today. Past oil shocks affected global markets, trade, and inflation. Venezuela's recent events follow these historical patterns. Understanding historical finance is key to interpreting modern global markets. Resource control remains central to economic influence. Bitcoin behaves predictably under geopolitical and economic stress. Historical events confirm repeated reactions during crises. Don't skip. The final historical chart reveals a repeatable pattern linking oil crises, currency instability, and Bitcoin trends. Historical finance teaches that geopolitical events affect more than politics. They reshape money, trade, and market psychology. Venezuela's repeated crises provide lessons for understanding global financial behavior. History is a guide to predicting patterns. Bitcoin adoption today reflects historical safe haven behaviors during periods of fiat instability and market fear. The U.S.'s strategic oil actions historically reinforced dollar dominance. indirectly affecting global financial systems and cryptocurrency trends. The final paragraph reveals key historical insight connecting Venezuela's oil, the dollar, and Bitcoin, a pattern repeated over decades. History shows controlling resources, currency influence, and financial behavior repeat predictably. Venezuela's oil seizure reflects these patterns. Observe, learn, and connect the lessons.